In this example, we'll be using Cornerstone Exercise 931 that can be found in your textbook on page 415. We will be preparing an accounts payable schedule. Our company purchases raw materials on account, and they've given us the information for how much we've purchased on account for April, May, and June. On average, they pay 20% of their accounts payable balance in the month of the billing and 80% in the following month. They would like us to calculate how much cash we plan to have to pay out or disperse during the months of May and June. According to the company's policy, we would say that in April, we would pay 20% of the $374,400 in accounts payable, and we would pay the remaining 80% in the month of May. So we take the full balance that's owed as of April and multiply it by 80% to arrive at the estimated amount of cash that we would have to pay out in May for our April purchases. In this case, it comes out to $299,520. In the month of May, we have accounts payable for our purchases of direct materials of $411,200. According to our policy, we would pay 20% of that amount in the month of May and the remaining 80% in the month of June. So we take our full balance of $411,200 and multiply it by 20% to arrive at the estimated amount we anticipate to pay out in May for those purchases. We also would take the full balance and multiply it by 80% to calculate how much we estimate to have to pay out in June for our May purchases. Finally, in the month of June, we have direct materials that were purchased on account totaling $416,000. According to our policy, we will pay 20% of that amount in the month of June and the remaining 80% in the following month, which is July. We take the full balance of the $416,000 and multiply it by the percentage we plan to pay in the month of June, in this case, 20%. So in the month of June, we anticipate paying $83,200 towards the purchases that we've made for direct materials. We add the columns to come up with how much cash would be needed in the month of May and June to pay for our direct material purchases that had been done on account.